Good evening, everyone. Okay. Good evening, everyone. Thank you for tuning in today. And today I'll be sharing on a beginner's guide to FX CFD trading strategy. Let me do some self-introduction first. I'm Daryl, and I have been with Philip for around 2 years now. And if you have been tuning in to our past webinar, right, you probably have seen me or heard me before. So if you those who do not know me, right, I'm the night CFD dealer. So if you happen to call in the night, you'll probably recognize me by my voice. Hope I'll be able to share with you some knowledge today, and I hope you'll be able to learn something and enjoy the webinar. Along the way, if you have any questions, right, feel free to write your questions in the chat box below. I'll be replying them during the Q&A session. Okay, so just like every other educational video or webinar, right, there will be a need for a disclaimer. So this is my disclaimer. This presentation today is intended for general circulation only, and everything discussed today, right, are all opinions. Please do your own research before investing. Should you need any kind of advice, kindly consult a financial advisor or contact your TR. Okay, so this is the content for today. I'll be sharing on CFD, which also means contract for differences, then FX CFD, and also trading strategies like candlestick patterns and trends, and common order types when you trade FX. So today webinar will be mainly on FX. I hope you enjoy the webinar. Okay, so everything for CFD is just a brief explanation lah. Okay, so if you wish to find out more about CFD, right, please do your own research. Okay, so what is CFD? CFD, which also means contract for differences, and CFD is a derivative product which means that it have value derived from another underlying assets. Okay, it is traded over the counter via a broker dealer network, which in this case, right, if you are trading with poems, right, that means you're trading is traded under Philip. Okay, so one advantage CFD have, right, is that you'll be able to buy or sell, which means you can profit in both bullish and bearish situation. This is depending on the type of strategy you want to use. Okay, so when you buy one stock contract, right, you do not own the underlying assets, but what you're getting, right, is actually a contract. CFD is a contractual agreement between an investor and a CFD broker to exchange the difference in value of a financial product between the time the contract opens and the time the contract closes. So different country equities, right, have different market hours. So if you hold past the opening hours, right, then there will be financing charges. Okay, so I'll just briefly explain the differences between stock and CFD. So one key advantages CFD have against stock is that we have this thing called leverage, which means we'll be able to use lesser margin to gain exposure. CFD allows you to go long or short. However, for stocks, right, if you're using our platform and you are also able to go short, you'll be able to short or leverage if you're using a margin account. However, right, you must have a SPL account. The interest is the same if you're using a margin account to trade. So, however, right, unlike CFD, you only need one account and you'll be able to short and you'll be able to leverage and tap into different asset classes like commodities, equities, DMA, and FX. Okay, which is more convenient for the trader. And there are also financing charges applies if you hold CFD overnight. Okay, do note that when you purchase a stock, you own the stock. However, for CFD, right, it's just a contract. You do not own the underlying stock. What you're getting is just a contract. Okay, so using candlesticks, right, as an example to explain on how we can trade CFD. Okay, whenever we think that the market will go up, right, we can long at the bottom and take profit at the top, or whenever we think it's the highest. However, if we anticipate the market starting to fall, right, then we can take on short positions to short the market and we'll profit when the market is falling lah. Okay, so we are not restricted by market directions and we can profit from both rising and falling market. So by now you'll be wondering, you'll be you would already know, right, that CFD is traded on margin. Okay, using the power of leveraging, right, we'll be able to take on larger positions using lesser initial deposits. Okay, with leverage, right, we can amplify our gains. However, do note that leverage is a double-edged sword. Okay, we can lose a lot more if the market goes against you. So one reason why people use leverage, right, is because we do not have large amount of money to diversify our portfolio to gain exposure. So what we do is we'll tap onto CFD, which require lesser margin, okay, to gain more exposure. Okay, so let me explain to you in terms of numbers, the definition of leverage lah, which is easier for us to understand. Okay, so if you use our platform before and you launch an order ticket, right, this is what you will see. Okay, so using Apple as an example, right, let's say we want to launch 100 Apple at $170. So when you launch the Apple ticket, the order ticket, right, you will see this particular thing on the screen lah. Okay, you can see the gross contract value, the margin requirement, and the long short financing charges. So over here, right, we can see that the margin requirement, right, is 10%. And this means that the margin required for us to put out, right, to take on these positions, okay? Which also means that in this situation, right, if we want to long or hold 100 Apple contracts, right, we will need around 2.3K SGD, okay, Singapore dollars of margin, right, to purchase the contract that worth around $17,000. Okay, so from this ticket, right, you also be able to see the long short financing charges. Okay, so let us compare in terms of money. Okay, let's just say I want to long 100 company ABC at $100. And for the discounter, right, the initial margin required, right, is 10%. So for stocks, in order for you to hold 100 at $100, right, you will need $10,000. However, right, using leverage with CFD, right, you only need $1,000. So using this $1,000, right, we will be able to gain exposure of a 10,000 contract value. Okay, so how can we amplify our gains or loss? So for gains, if the stock goes up to $150, right, then we'll be profiting $50 per share. So for stocks, we'll be up 5,000 and there'll be a 50% gain. However, for CFD, right, if we will be profiting the same 5K. However, right, we're actually up 500% because we use 1K to profit 5K. So let us hear about the bearish side. Okay, when the market goes against you, right, so company ABC goes down by $10, so we'll be losing $10 per share. For stocks, we'll be down $1,000, which is 10%. However, for CFD, right, we'll be down $1,000 and that's 100%. So this is why leverage is a double-edged sword, okay? They can amplify your gains and losses. Okay, so moving on. So these are the different types of CFD instruments that we offer, okay? We have equities where we offer CFD and CFD DMA, okay? We have commodities, which are gold, oil, silver. And we also have indices like S&P 500, US Tech, Wall Street Index, and many, many more. Okay, there are even mini contracts for the indices, and also we have Forex, and FX is the global marketplace for exchanging national currency. As you can see from our title, today I'll be focusing more on the FX side of CFD. Okay, if you wish to know more about equities, commodities, or indices, right, do stay tuned and turn up for our upcoming webinar. We may be doing some of these next lah. Okay, so now let's talk about Forex. What exactly is FX? Okay, I believe we all been to a money changer before, and we tend to see many numbers with different flag on it on the screen lah. Okay, so to make it easier and simple for us to understand, right, I'll be using SG, Singapore dollars, and Malaysia ringgit. So if we were to go to Malaysia, we want to exchange money, and we see this quotation on the money changer screen lah. Okay, the quotation is 3.4128, meaning to say, right, one SGD, right, can be exchanged for 3.41 ringgit. So based on the codes, right, okay, because it's SGD to Malaysia Ringgit, so SGD is the first currency. So SGD is the base currency, whereas, right, the Malaysia Ringgit, right, is the second currency, and that is the term currency. So meaning to say, if you want to change 100 SGD, right, okay, you will receive 341 ringgit. So these are some codes that I gotten from poems, okay, and these are the commonly traded pairs lah. Okay, depending, definitely there are more forex pairs out there. We have more than 30 over pairs, but just for today, I'll be showing on these commonly traded pairs. Okay, we must always remember, right, the first currency we see is our base currency, and the second currency we see is our term currency. So when we enter a buy or sell trade, right, we are actually referring to the base currency, and opposite transaction takes place in the term currency. So using the first one as an example, Euro USD as an example, okay, Euro is our base currency and USD is our term currency. So if you were to refer to it, is base then term, okay? So using the few codes, right, you can immediately know that 1 euro, right, can be exchanged for 1.09 USD. Okay, 1 euro can be exchanged for 158.88 yen. 1 USD can be exchanged for 145.522 yen, and 1 pound can be exchanged for 1.27 USD. Okay, so when we enter a buy or sell trade, right, we are actually referring to the base currency. So an opposite transaction takes place in the term currency. Okay, for example, we use the pound dollar as an example. Okay, so pound is our base currency and the dollar is our term currency. So for example, right, if you want to buy or take on a long position in pound dollar, essentially what we are buying, right, we are buying the pound and we are hoping that the dollar will weaken. So we are selling the dollar. So if we are in a long position, right, we want the pound to strengthen and the dollar to weaken. And if we are in a short position, right, then for us to profit, the pound must weaken and the dollar must strengthen. Okay, so something for us to take note is that we have this FX CFD rollover swaps. Okay, so FX CFD positions that hold overnight, right, there will be swaps rollover for the spot underlying. Okay, swap points, right, can be either be gained or lost. Therefore, the interest is earned on the currency being bought and paid on the currency sold. So the net interest returns from the underlying spot FX, right, will be credited or debited to from the customer account, right, in the form of swap points adjustment. So if you're wondering where you can find about the swap points, right, okay, then this is the FX CFD heat map, right, where you can help you identify the trends of the different FX pair based on the past data. And you can find this under PhillipCFD. Okay, it's inside the PhillipCFD website. Okay, under research and tools, under FX swap heat map. So the darker the color, right, means the more positive or negative the swap points is. Blue is positive and red is negative. As of this current map, right, you can see that the Euro Yen has the most positive swap points, indicating a positive trend. So if you have used our platform before or planning to use, right, based on our platform, right, Poems allows us to access to more than 30 major global forex pair, and it tracks the performance of the underlying spot FX. Okay, so the margin is as low as 5%, which is a leverage of 20 times. And the minimum contract size is 10,000 of the base currency. And the best part about trading with us, right, there is zero commission for every buy and sell trades you make with Forex. Okay, there is no financing charge, no FX price fee, and we offer competitive spreads. And you'll be able to access to 30 major global Forex pairs. And we have multiple platforms for you to trade. We have Poem, we have mobile P3, and we have MT5. And mobile MT5, depending on which platform suits you the best lah. Okay, so now let us talk about how to make a successful trading plan. Okay, so personally, right, I will tend to follow this entire flow. Okay, so first and foremost, right, is what kind of trading strategy do I want to use? Okay, so in trading strategy, right, I'm talking about what kind of indicators should I use to find my entry price and my exit price, and what will be my take profit and what will be my stop loss. And also the strategies like what kind of what kind of order types should I use so that I can ensure that I will profit from the trade lah. Okay, the second is our risk to reward. How much should I risk to get rewarded? Do I want to risk $100 and get rewarded by $10? Okay, later I will talk more about it. Okay, lastly is to review your entire performance. Okay, so for a start, definitely with a trading strategy. So what kind of indicators do I want to use? There are so many indicators out there. Okay, if you were to Google technical analysis or indicators, so there will be like 100 over indicators appearing on your screen. Okay, so some of the few indicators are like moving average, candlestick movement, trend lines, support and resistance, and many, many more. So these are the common few ones lah. However, right, after sometimes, right, of familiarizing with the different indicators, right, you tend to do a mixture of indicators. So personally, right, when I trade, right, I want to trade with a mixture of indicators. So right after we choose our trading strategy, right, then we have to stick to this strategy, right, for all our trades. So in order to know that if this strategy is actually working best for us or not. Okay. At the end of the day, right, we only use technical analysis or rather indicators, right, for three things. Okay. What is my entry price? What is my take profit? And what is my stop loss? Okay. So there are many different trading strategies. And today I'll be just briefly touching on the different types of trading strategies. So please do your own research before trading and definitely read up more lah. Okay, just by a few minutes of me presenting, right, doesn't mean that you'll definitely earn money or you'll profit from it lah. So practice more and get yourself familiarized with the different trading strategies before really touching onto it lah, trying it with real money. Okay, and know which strategy actually works best for you. So one commonly used strategy, right, is the simple moving average. So from this chart, right, you can see the blue line. Okay, so that blue line, right, that move very closely to the green and red candlesticks. This is the simple moving average 20 days. So what some traders do, right, is they will monitor the moving average and then understand the pair sensitivity to the moving average. So using this example, right, okay, we can see that whenever the chart is near the moving average, right, there will be a rejection. So whenever it touch the blue line, immediately the chart go down. Touch the blue line, go down. Touch the blue line, go down. You can see based on the circle area lah. Whenever they touch, it got rejected. So one thing the trader can do is he can take on positions whenever the moving average is at the chart, at the candlestick lah. Okay. And also using the moving averages, right, can also determine the overall trend. Is it an upwards trend or is it a downwards trend? Okay, so the next strategy is the trend line. So trend line is also another common indicator. Okay, trend line is also easily recognizable. So what you can do is you just draw a line on the chart and connect those price together. So the lines will give you a clearer directions of the FX pair movement. So same thing, whenever it touches the line, it bounce upwards. Touches the line, bounce upwards. And it clearly tell you that this is in an upwards trend. So if I'm trading this particular pair, right, okay, then what I will do is I'll take on long positions, right, whenever the pair is near the trend line. Yeah. And you can see based on the circled area lah. So the next one is support and resistance. So the green line, right, is actually the resistance, while the red line is actually the support. So the resistance level, right, is where the price usually stop rising and dips back down. For the support level, right, is where the price stop falling and bounce back up. So from this chart, right, we can see that the FX pair respect the support and resistance. So whenever they touches the resistance, right, it falls back down, and whenever it touches support level, right, it goes back up. So same thing, if I spot this kind of chart, right, then I'll take on two different types of position, a long at the support level and a sell position at the resistance level. So I can just alternately swing around. Okay. Also, right, there are some important candlesticks we traders should know lah. Okay. So traders use these bullish candlestick patterns, right, to identify the trend themselves. So is it a bullish market or is it a bearish market? Okay. So we can use these candlesticks, right, to actually determine if it's the start of a bullish trend, or maybe this particular pair is about time to reverse, that kind of thing. So for today, I won't be covering these candlesticks, but you can actually read them up and practice them up during your free time, and you can try to identify these patterns in your trade lah, or you can create a demo account to try out this trading strategy. Okay, so these are also some bearish candle patterns, okay, which I think is important for us to know. And this usually tell the trader that this pair is in a bearish trend, or is it the start of a bearish trend. Okay, we have the hangman, bearish engulfing, and evening stars. So due to time constraint, right, I also will not be explaining this. So please go and read up during your free time. Okay, and then also practice them with a demo account. Okay, so now let's move on to risk. So this is like more like a risk to reward. So what is our risk to reward? How much should I risk to get rewarded? Okay, now we need to ask ourselves, how much are we comfortable losing per trade? So some will say $100, some will say $50, some will say $1,000. Okay, so this is entirely up to you. Okay, so for our risk to reward, right, we need to know that if you are risking, for example, $10, right, definitely we want to look at getting a bigger reward than our $10 risk. So right after we find our entry price, okay, and our take profit and our stop loss, okay, we need to identify if this trade is worth trading or not. Okay, so if we were to look into the risk to reward ratio, risk to reward table, right, okay, assuming we are only risking $10 per trade, okay, and definitely we want to risk the least and maximize the reward ma. If you are risking $10 for a reward of $5, right, and that is 0.5 times trade, right, then personally I will not take on that trade lah, because the risk is not compensated. Whereas, right, if you were to take on a trade where the risk is $10 and the reward is $100, and that is a 10 times. Okay, so this kind of 10 times one, then definitely I'll take on the trade lah. Okay, so in many cases, right, traders tend to find that their ideal risk to reward ratio, right, is around 1 to 3. So in short, right, for every $10 I risk, right, I want to get rewarded by $30. So they tend to work around the 1 to 3 ratio lah. If it's under 3, then they probably won't take the trade. They'll wait for a better opportunity. Okay, to sum it all up, right, on the risk to reward ratio, right, assuming you are using the risk $1 and the reward 3, right, okay, then and we follow the ideal risk to reward ratio lah. Okay, this is in terms of money. So now let's use $100 risk and a reward of $300. So for every trade, right, your stop loss is $100. And for every trade, right, your take profit is $300. So no matter what, you stick to your strategy. So it's either you hit your stop loss or you hit your take profit. So your stop loss is $100 and your take profit is $300. And you can see from the table, right, the first trade you lose $100, the second 100 you lose 100, the third one you profit 300, the fourth one 100, fifth one 100, and then go on and so forth. Okay, so in all, right, you only hit three take profits, and you hit 7 stop loss. Okay, so if we were to sum it all up, right, you actually have a 30% hit rate lah. So overall, right, you will be profiting $200. So as long as you hit 3 out of the 10, right, then you're actually profiting. So if you actually have a proper risk management and also a risk to reward ratio, right, and you stick to the same strategy, right, ideally you will be profiting lah. However, if let's say you realize that after some time, no matter what you do, right, you only have a 20% hit rate lah. Okay, and which means that you're actually losing $200 in every 10 trades. Then definitely you have to review your strategy and work on it. See what went wrong. Maybe this indicator don't suit you. You know. Okay, so lastly is our trade performance and review. Okay, like the previous slide. Okay, we need to track our own trades. Okay, and we will always do simple table like how I did mine lah. Okay, so that's how I usually do mine, and to know that if this strategy is actually working for us. Okay, so if the strategy is not working for us, right, then how can we improve on it? So if it's working for us, right, then what went well? Can I improve my hit rate? No? Can I hit maybe 7 out of the 10? Yeah. So you're just repeating the whole process again, and then try to work on your weakness and strengthen your strength. So if we have a good trading strategy and a good risk management, right, definitely we are on a higher hit rate to make more money on trading. So the next segment that I'm recovering, right, is the order types. So order types, right, also play a very important role when you trade FX. So these are the common types of orders, right, that I'll be focusing on today. And these are the commonly traded orders for FX lah. Okay. So the first one is limit order, which also means that to buy or sell only at a specific price or better. This is a minimum or maximum price to be paid or received to execute your trade. Apart from taking on positions using limit order, right, you can also use limit order to set your take profit or stop loss, as shown in the example above. When you set a limit price, right, okay, the order will be filled when it touches the limit price. Okay, so let's say I want to open a position on euro dollar, okay, and the first thing I do is I can click on limit order. Okay, since I want to long euro dollar, right, then I choose buy, then I enter 1, and when it's at 1.09, so I type in 1.09 and click on buy. So your order will be Q lor. So your order will will only be bought, right, when it reaches 1.09 or better. So for stop limit order, right, it combines the feature between a stop order and a limit order. So once the price reaches, right, a stop limit order, right, becomes a limit order to buy or sell at a specific price or better. So stop limit order, right, is not a guarantee. It's not guaranteed. Okay, if the price get through the limit price, right, and this is usually used as a way to exit an existing positions, more like a cut loss. So how can you use a stop limit order? See, let's say, right, you're already in a position and you want to cut loss, right, if the market goes against you. So what you can do is use a stop limit order for your stop loss. Okay, so point A is our stop price and point B is our limit price. So once the stop price hits, then the stop limit order, right, becomes a limit order to buy or sell at a limit price or better. So using this example, using this example, right, okay, since the limit price is lower than the stop price, right, then your positions will be filled at a better price. So this is how you place your stop limit order. And maybe you can take a screenshot so that later on, if you want to do a stop limit order, right, you can refer to this screenshot lah. So the next one, right, that is commonly used, right, the next commonly used orders, right, is one cancel others, OCO order. Okay, this is an order simulating, right, that if one order is executed, right, the other parts is automatically cancelled. So the OCO order, right, consists of three parts. The first one is the limit price, which is the take profit. And the second one, which is the stop price. And the third one, which is the stop limit price to cut loss. How it works, right? It means that when you're already in a position, right? Okay, when you want to take on, you want to place your take profit or stop loss. So such that, right, when the market goes in your favor, right, you will be able to take profit. If the market goes against you, right, you'll be able to stop loss. So when one order is executed, right, then it will cancel the other. So meaning need to say, right, if you take profit, then your stop price, your stop limit price will be cancelled. If you hit your stop loss, then your limit price will be cancelled. Okay, so let's say, right, you already have a position and you set the OCO order and you entered the position at the red circle at point C, and you set your take profit at point A and your cut loss at point B. So after some time, right, the market goes with your favor and it triggers the limit price to take profit at price A, at the point A. Then once you take profit already, right, your stop price and your stop limit price at point B, right, will be cancelled. So same thing, okay? Same thing you said is either to take profit at point A or cut loss at point B. So after some time, right, the market goes against you and it hits your stop price and hit your stop limit price to cut loss at point B. Now your limit price at your limit price to take profit at point A, right, will be cancelled. So based on the two examples, right, if you want to put in, we already have a long position and we immediately want to take profit or stop loss, right, then this is how we can place an OCO order in Poem's platform. Yeah, maybe you can screenshot this so that later if you want to place an OCO order, right, then you can refer to it. Okay, so this should be the flow of successful forex trading. So the first thing that we should be familiarized, right, is we should be familiarized with the particular pair. We should understand that the sensitivity to the pair and what level should we take note. Okay, so apart from that, right, we also have to understand if there's any news that will affect the pair movement. Such news are like FOMC, non-farm payroll. So some traders, right, they like to trade with the news lah, while some traders hate to trade with the news. So this is entirely up to your own trading strategy. So personally, I avoid trading with the news. So if there's anything happening today for this particular pair, right, then I will avoid trading for that day lah. Or rather, I'll trade another day when there isn't any news. So the second thing, right, is we must analyze. So second thing is the technical analysis. So like what I mentioned earlier on, we have to analyze their sensitivity level to a particular level. Okay, so we will analyze the pair based on their technical analysis, such as trend line, candlestick, moving averages, and other indicator. So depending on the type of indicator you like and suitable for your strategy, right? So personally, right, I know a few traders and they all have their own unique developed strategies. So one of my good friend, right, actually uses Fibonacci retracement, while another one actually uses supply and demand, and another one uses candlestick movement. So then again, you have to figure out what strategy works best for you, okay? And you just have to stick with what is working very, very well for you, lah. Okay. So after you do your own technical analysis, right, and the technical analysis should tell you if you should enter the trade. So always remember, technical analysis is to find your entry price, your take profit, and your stop loss. Then after which, right, you move on to your risk to reward ratio. Like what I mentioned earlier on, right? Okay, it's more on how much you are risking to get rewarded. I'll definitely go for something that is rewarding me well, lah. Okay, so using my $100 as my risk, right? Can I be rewarded 200? Can I be rewarded 300? So if the reward is 3 times and above, right, then I will consider the trade. If the risk to reward, right, is not worth it, right, then I'll probably skip this trade. So if everything aligns together, the moon, the stars all align together, right, then I will execute the trade. So there are many times, right, okay, when you are trading, right, you will realize that actually the moon and the stars align already, but we just happen to miss the trade, miss the entry. Okay, so do not have to worry, because there are a lot of opportunity out there. So do not be affected by maybe you FOMO or you greedy, because there's always opportunity out there, and always trade without emotions lah, and invest with money that you are comfortable losing. So if you do not know, right, okay, we have launched our MT5 recently, and this is something new for us, and definitely new for some of us lah. Okay, and those who have traded MT4 before, you would have heard of MT5 and is familiarized with the interface. Okay, so MT5 is created by MetaCodes and is a successor of MT4, and is very popular among trading professionals, and is available in both desktop version and is mobile friendly too. So this is the summary of MT5. So commission rates are lower for MT5, which you can refer to our website for the rates. And there's also a auto close out function where the system will close out your largest unrealized loss position first. So whereas for counters, right, currently we have 200 plus, and we are still working to add more CFD counters. So if you have any counters that you're interested to trade, right, so just feel free to call a TR or call in the CFD dealing desk so we can assist you on that. Whereas for ledgers, right, in Poems, you need to convert your SGD into foreign currency to trade. Whereas for MT5, right, you only need to hold the margin requirement in SGD, and you do not need to worry about the foreign currency. And in MT5 is more famous for their one-click trading, when you can buy and sell with just one click. Just by clicking on the buy or sell, right, then setting your quantities, right, and your order will immediately be executed. And it's very convenient and easy to use. Whereas for advanced order type, right, okay, there are more order types in MT5, and it allows you to set the TP and SL at the same time. And lastly, hedge mode. You can open both long and also open short positions at the same time for the same counter lah. So this is how you can open a Poem CFD or MT5 account. So for our existing customer, you can click on the CFD account here and to opt in for MT5. So for new customers, right, you can actually create an account via poems.com.sg and follow the steps. Alternatively, you can call your TR, or you can walk into the Phillip Investor Centers. Okay, and another alternative is you can scan the QR code at the bottom. So for those who wish to find out MT5, right, and would like to try their demo account to actually get familiarize yourself with the platform, or rather try different strategies, right, you can open your demo account here. So you can click on the try demo, okay, and follow the instructions, putting your name, your mobile number and others. And then after you fill in your personal details, right, okay, there will be an email sent to your email lah. There's a 6-digit code to verify your email, so you can enter the 6-digit and yeah. So this is current our ongoing promotion. Okay, our ongoing promotion. Okay, so for those who do not know, right, our promotion have extended and you have until 29 December to get the cash credit lah. Okay, you can scan at the QR code at the bottom right to know more about it. So as usual, how our promotion works, okay, if you were to execute 8 FX CFD trades, right, immediately you get $20. And if you were to execute another 28 more FX trades, right, then you will get $100 CFD cash credits. So technically, right, you only need to open 4 FX contracts and you need to close 4 FX contracts. You'll get $20 cash credit. Okay. However, to achieve 28, right, you only need to open 14 and to close 14, and then that will be 28. And the month is ending, so if you want to be eligible for this promotion in the month of December, so you need to start soon. So, and this is the last month for it lah. So I hope you can enjoy the 120 cash credit every month until December. Okay, so this is the Q&A time. Okay, so feel free to scan the QR code and create your account today. So do you all have any questions to ask? So give me some time to read the questions that is currently being asked lah. Okay, John Kwa. Okay, you ask, hi Daryl, please explain again the risk to reward ratio slide, where you mentioned the ideal risk is 1:3 for a trade. I didn't manage to catch it. Okay, let me go back to that. Okay, so what I'm trying to say, right, the ideal ratio, right, is 1:3. Meaning to say, right, if today you're risking $10, right, definitely your take profit is $30. Okay, so you try to get it like how do I put it? So make the risk compensable lah. Okay, what I'm trying to say, right, is every $10 you trade, right, definitely you want to get $30 in rewards. So if your stop loss, right, is $10, okay, your take profit should be $30. So your risk to reward ratio, right, is 1:3. So if today, right, you're risking $10, you want to get $30 or more. Yeah, so this is what I'm trying to say lah. So for every trade, you definitely try to stick at 1:3. If the risk to reward is like maybe 1:1, then it don't really make sense for you to trade $10 just to get $10. Or rather, $10 just to reward yourself with $5. Definitely we don't want to look at that mah. So the risk to reward don't make sense. So yeah, I'll look at something about 1:3. So someone asked, what is the optimal holding period for CFD? I won't say that there is an optimal holding period for CFD. It's just based on your own strategy. So some people like to hold maybe 2 weeks, 3 weeks. Some people maybe hold one day, and they try to avoid financing charges. So then again, it's based on your own strategy and what you want at the end of the day. So another one, Zheng Hao, okay, you ask, what is the easiest FX pair to trade? Okay, I won't say that there is any easiest FX pair to trade, but I will say that you must first understand every level, you must first understand the FX pair. So certain pairs, right, are very sensitive to a certain level. For example, their resistance and their support. So whenever they hit their support, they bounce back up to their resistance. They hit their resistance, they bounce back down to their support. So you must understand the pair sensitivity, and you must understand the pairs in terms of how it reacts to the news. So I wouldn't say that there is a easiest pair, but I would say you must be comfortable with that particular pair. Like you have to spend time with it and then understand the each level and their sensitivity and how it reacts to a certain indicators. Because some indicators, even though your indicator may be correct, but certain pairs they don't respect it. So you must know that which pair respect the indicator, which pair don't, which pair respect the support and resistance. So in my opinion, the most traded one is the euro dollar. Okay, but whereas some people they like the euro yen or the dollar yen. So it depends on different people to people basis lah. Personally, I like to trade on the euro dollar. So what is the ideal period to trade FX, intraday or few days? So like what I mentioned earlier on, okay, the optimal holding period is also quite similar to this. It's really entirely up to you and what is your strategy. So personally, I will try to keep it because I'm someone who trades very fast on. So I will scalp very quickly lah. So whenever there's an opportunity, then I just enter, earn a bit, then I'll just run away lah. So I don't have an optimal timing or ideal period, but definitely I'll try to stay to my strategy lah, holding it until I hit my TP at least lah. Or rather whenever the pair that I traded, right, okay, it goes up maybe 30 pips ahead, then I'll change my my stop loss, right, to my entry price. So no matter what, right, if the market goes against me, right, then I know that I'm good lah because I'm no matter what I'm at my break-even price. So it's either they hit my break-even price or I hit my take profit price. So there's no ideal period of how long I hold my trades and how long do I trade now. So yeah, I hope I answer your question. Okay, so due to time constraint, and there are quite a few questions being asked, so maybe I answer one more question, then the rest, I'm sorry, but you have to call in to our dealing desk lah, or you can actually find out more information in our website. Okay, so someone actually asked, I just started trading CFD, and I could not find uh, some counters inside poems. So for this situation, right, if you happen to trade CFD and you cannot find the counter that is inside poems, right, then can I suggest you to call in to our dealing desk? Okay, please let us know what counter you wish to trade. Okay, then we will try our best to cater to it. Yeah. So if you all have any counters that you wish to trade and it's not inside poems, right, just feel free to call in the dealing desk. Then we will try our best to cater to it. Okay. And yeah, thank you so much for attending today's webinar. Okay. So for those questions that are not being answered, right, you can either call your TR or call in our hotline, or you can actually read up on our website. Okay. So for more information, you can view our website at PhillipCapital.com. Okay. You can read the info sheet where you can find more details about it. Or alternatively, you can call in our dealing desk and the number is at the bottom right. Okay. or you can locate us. We have quite a few locations and you can find them in our website. Thank you so much for attending today.